Florida Realtors has published its housing market statistics for October 2025, and there's multiple eye-popping numbers this month. The first one that really jumped out to me was for new pending sales of Florida's single-family homes, which were, believe it or not, up by 23% compared to last October. That's 23% more single-family homes going under contract than this time a year ago. I mean, I knew we were starting to see improvement in sales going into October. Mortgage rates have been falling, and new pending sales were up year over year by about 10% in August and 7% in September. But 23%? What happened in October? Well, it turns out a lot of this increase is due to a technicality. To explain, let's start by considering that the reason we'd like to use year-over-year percent changes when analyzing the market is because it bypasses seasonal effects, which makes market trends easier to interpret. If instead we focused on the month-over-month change, that is, the change from one month to the next, we would have a hard time telling how much of the change was due to a shifting market rather than a normal seasonal shift. For example, March almost always has more new pending sales than February. That's been the case in 6 of the 7 years worth of Florida data displayed here on this chart. The only exception was 2020 because the pandemic arrived and hit with full force in March. So if we see that new contracts increased in March compared to February by, say, 10%, we can't tell if that's because sales trends are improving or if it's just the normal seasonal effect moving into the springtime months. In fact, sales could be up month over month even when the market is actually weakening, just so long as the seasonal effect is large enough relative to the weakening trend. When we compare our metrics on a year-over-year basis, by contrast, we are comparing this month to the exact same month in the previous year, so there is no seasonal effect. Sometimes, though, this method can throw us a curveball called a base effect. What's a base effect, you ask? Well, when we make a statistical comparison between two time periods, we are comparing the current period to a previous period, and we call this previous period a base period. In a year-over-year analysis of monthly data, like the new pending sales data we're looking at here, October 2025 is the current month, and October 2024 is the base month. A base effect, then, is some kind of out-of-the-ordinary phenomenon that impacts the metric we're analyzing in the base period, but not the current period. In our case, even though we're avoiding seasonal effects by using a year-over-year analysis, our statistic, a 23% increase in new pending sales of single-family homes in October, is still obfuscated by a base effect that impacted the October 2024 data. And what exactly was this base effect? Most of you have probably guessed it by now. Last October, we were not only dealing with the immediate aftermath of Hurricane Helene, which made landfall in the Big Bend region on September 26th, but we had Hurricane Milton making landfall a couple weeks later on October 9th. This had the effect of negating, or at least postponing, a fair amount of market activity that otherwise would have occurred during October of last year. New pending sales are very sensitive to hurricanes and often get postponed, not just in areas that have been impacted by a storm, but even ahead of the storm. Buyers tend not to want to make life-changing purchases when there's an inbound hurricane, it turns out. They often move into a wait-and-see mode for a time. Notice how much of the heavily populated Florida peninsula was under the gun from a get-go. This is a forecast map from the National Hurricane Center as of October 5th, 2024, 4 days prior to landfall for Milton. And you can see that over the next few days, Milton's forecast cone continued to blanket many of the state's largest population centers. That had the effect of slowing down new pending sales and new listings even ahead of the storm. By contrast, Helene's forecasted approach in late September avoided most of the state's largest population centers, so the statewide impact on our market statistics ahead of the storm was less significant. Obviously, the after effects of Helene were a much different story, but those impacts only affected the September market statistics for a few days at the end of the month. A lot of the impact on the market statistics carried over into the following month. So looking back at October of last year specifically, we were dealing with after effects from 2 hurricanes, plus those pre-landfall impacts from Milton. Because of this base effect, we end up with a 23% year-over-year increase in new pending sales of single-family homes. It's difficult for us to know exactly what new pending sales would have been in October 2024 had we not had the 2 hurricanes, but it's reasonable to assume they would have been higher. Just for fun, let's assume that new pending sales would have tracked along a similar pattern to what we saw that time of year in 2023, rising slightly compared to September. Just to make my own math easy, I put our hypothetical new pending sales count for our alternate non-hurricane universe version of October 2024 at 20,000. If that had been the count last year, then this October we would have been up almost 9% year over year. That's in line with the gains we've seen the prior 2 months as mortgage rates have trended downward. Again, we're just taking a stab in the dark here, but I'm reasonably confident that the trends of the prior 2 months are still in effect now, given that interest rates are where they're at. Now, before we move on, note that last year, a lot of those new pending sales that were postponed by the hurricanes were simply pushed from October into November. That's going to be a base effect in next month's release, but in the opposite direction. We should expect the year-over-year change in November's new pending sales to be understated, as opposed to the overstated change in October. The condo and townhouse side of the market remains somewhat weaker than the single-family home side. But as we've discussed over the last 2 months, lower rates have boosted everything, and new pending sales of condos and townhouses are trending upward. There was, however, a similar base effect for new pending sales in October in this category, just as there was for single-family homes, leading to an overstated year-over-year increase of almost 19.5%. So that's what we're seeing as far as homes going under contract, but what about closings? Are they impacted by the same hurricane base effects that new pending sales were? The answer is yes, but just barely. Some scheduled closings are delayed during hurricanes. Sometimes homes need additional inspections and the like after storms pass, but closings are canceled or delayed at a far lesser rate than, say, decisions to list a home for sale or put one under contract. In October, closed sales of single-family homes were up almost 14%. And the hurricane base effect is only a small factor here. Most of this growth is real and was predicted by strong growth in new pending sales in the prior couple of months. Condo and townhouse closed sales were up as well, rising by just over 11% compared to a year ago. After 4 consecutive month-over-month declines in single-family inventory, and 5 such declines in the condo and townhouse category, inventory levels in both property type categories were a little higher at the end of the month than where they started, breaking both streaks. As we've discussed before though, this is normal for this time of year as the winter market season starts to wind up for many coastal destinations, particularly in Southwest Florida. We still remain at similar inventory levels to those from the beginning of the year. On whole, home sale prices remained in line with this year's prevailing trends in October. The median price for closed single-family sales was down year over year by less than 1%, falling to just over $411,000. Over in the condo and townhouse category, the median sale price was down close to 5% from a year ago, just as it was in September, this time falling to $300,000. As always, Florida Realtors has a wide array of other metrics available for you to review, not only at the statewide level, but also for your local market. This month's local data should be interesting. How big was the base effect on new pending sales in your area? It really did vary a lot depending on where in the state you live. Thanks for watching. We'll see you next month.